Hey, what's up, everyone? Welcome back to another video. I know we didn't have an AMA earlier last week. Had some scheduling conflicts, so I wanted to get a video out and give you guys some good FaceTime too, since I know we didn't have the AMA, and then I may end up doing a solo. I'm recording this on Monday. I may do a solo AMA tomorrow because Mitch, I believe, is out of town. So I'll confirm that with him, and if he is out of town, I'll either see if Task can fill in or just do a solo AMA. But I will do some kind of AMA tomorrow, obviously, because we didn't have one last week, so I don't want to go 2 weeks with no AMA. So today I wanted to put together a little video because I just saw that LeoStrategy came out with this post. So obviously talking about their weekly metrics as they do every week, and we will kind of ride through these numbers and see where things are at with LeoStrategy. For some added market context, crypto has been absolutely nosediving lately. So Bitcoin's down like $20,000. ETH is down double-digit percentages. Hive is down about 50%. Most altcoins in general are down pretty heavily. And with that kind of market, obviously, LeoStrategy, I would consider, LeoStrategy products to be different than most altcoins, but it depends on which one you're looking at, right? So like LSTR, for example, is exponential Leo exposure. So it makes sense if LSTR goes down more than Leo goes down in a down market. It also makes sense that LSTR goes up more than Leo does in an up market. Surge should trade like a bond, but obviously, crypto markets are going to be crypto markets. And what I've noticed is some people from the presale obviously are able to take some profit and then throw it into things like Hive, for example, or other altcoins, because they believe that altcoins will return and obviously go back up. Obviously, I don't think that they priced in that altcoins could just keep going down as they kind of have been in the past few weeks. So with stuff like that happening, obviously Surge gets a little bit mispriced, even though it's a bond. It should trade a lot more stable than everything else. I actually think it is actually holding up a lot more stable than everything else, although I do think it's trading at a very deep discount. And we'll actually get into that during this video. So that's where LSTR and Surge are. In terms of Leo, Leo is obviously an altcoin, so kind of tracking the rest of the altcoin market. I do think that the downturn is a lot more muted for Leo because obviously we have a lot of demand metrics and the limited finite supply. So Leo has not dropped as much as most altcoins. I think it's down maybe 15% or so, while most altcoins are down, like I said, closer to like 50%. And then you've got tokenized Tesla still in pre-sale, so we'll get into that during this as well. So that's your little market update. Here's a LeoStrategy update. So in the past week, LeoStrategy acquired an additional 144,086 Leo, which represents a 211% APR yield for LSTR holders. Obviously, I'm happy about that as an LSTR holder. Here they show, hopefully this shows well on the screen. Yeah, that shows pretty well. So here they show obviously a teaser screenshot from their dashboard where all this data is. So I'll just kind of run through this. The Leo price right now is about 11.5 cents. The total supply of Leo, about 29.5 million. Obviously, the max supply of Leo is 30 million, and then every day or on regular basis, bridge transactions happen for all the Leo bridges, and then some part of that gets burned. So there's a fee that's generated every time you bridge Leo, and then it burns it from the supply. So the supply of Leo is a max of 30 million, and it only drops over time. Leo holdings by LeoStrategy are 3.695 million. So they are very close now to 3.7 and obviously to the bigger 4 million Leo milestone. The net asset value or NAV of that Leo is $429,863. So you obviously get that by just multiplying the Leo holdings by the current Leo price. Leo yield week to date is 4.06%. So to calculate that is very easy. You just take the Leo gain week to date, which is 144,086 Leo that they acquired, and you divide it by the Leo holdings from last week. And that's how you get the obviously the increase in Leo held by LeoStrategy, which is the Leo yield. If you annualize that yield, you get 211% APR. That's obviously where you get that big, kind of headline metric. The Leo dollar gain week to date is $16,570. And then the Leo gain in dollars annualized and Leo annualized is $862,000 worth of Leo every year, aka 7.49 million Leo. added to LeoStrategy every year if they keep buying at this 144,000 Leo per week pace. Obviously, the pace can fluctuate, based on market dynamics, based on, the success of LeoStrategy products and the profits from market making, etc. So all those things can kind of contribute to fluctuations in how much Leo they buy. But they do tend to buy, 6 figures worth of Leo every single week. That has not slowed down in any way, shape, or form. So they basically talk about the acquisition of more Leo. They also talk about, when tokenized Tesla sells out, it will proceed to the open market with $20,000 in liquidity pools seeded at launch at the peg, by the way, of TTSLA to Tesla. So that is a 1 to 100 peg. So for example, if Tesla's trading at $420, then tokenized Tesla should trade at $4.20. So tokenized Tesla is designed to track the price of Tesla over time. And they talk here, that's the reason I wanted to mention this. They talk here about how tokenized Tesla has a much different volatility profile and therefore a different correlation than all other Leo ecosystem assets. So what this does is it injects external volatility into the vertical stack of LeoStrategy. By doing that, they create more arbitrage windows, not only for having a fourth market maker, because obviously right now they've got the 3 cross-chain market makers. This tokenized Tesla, when it's sold out, adds a fourth market maker, which already obviously adds more profit to LeoStrategy. But it also, their theory, which is we'll obviously see if this plays out how they expect it to. Their theory is that by having other assets like tokenized Tesla, which have external volatility profiles, because tokenized Tesla's price is driven not only by sways in the Leo price because it's going to have a Leo pool attached to it, it's also driven by sways in the Tesla price. This essentially manufactures volatility inside the entire stack of LeoStrategy, market maker assets. So Leo, LSTR, Surge, and then obviously tokenized Tesla. By having external volatility, you're actually injecting that volatility across the whole asset stack. And the way this is designed, in my opinion, is very genius, because you've got, obviously you've got Leo as like the kind of core asset of the whole ecosystem. Then you've got LSTR, which is like the equity asset for LeoStrategy, and it's got a LSTR Leo pool. So any volatility in LSTR then brings volatility to Leo. And then you've got the Surge asset, which looks more like a bond, so it's much more stable. And that is also paired in Leo. So that brings its own volatility profile to Leo. And then you've got tokenized Tesla, which has a TradFi, because it's obviously Tesla is a stock. It has its own correlation, completely different than crypto, and that is also paired with Leo, which then brings its volatility profile to the table for all the other assets, because they're all paired in Leo. So it's actually this really fascinating, I would say, a fascinating experiment that we're kind of seeing in real time, which is if you build new assets with varying risk profiles and varying correlations, and you pair them all to Leo, you have one pool that is paired to Leo, obviously on Hive Engine, and then you have external pools that are paired to other assets. Like I think tokenized Tesla is going to be paired to USDC on Base. That's what I would assume. So you're going to have TTSLA USDC on Base, and then you're going to have TTSLA Leo on Hive Engine. That basically means that as tokenized Tesla is traded on Base in the USD denomination, it's traded based on the Tesla stock price, which then means that the TTSLA Leo pool needs to be arbitraged regularly in order to match the tokenized Tesla price across blockchains, which means that LeoStrategy profits, from obviously arbitraging those loops. And then they take those profits, they buy more Leo, which then increases the over-collateralization of tokenized Tesla and makes it continually safer and more magnetized to its peg. It also does that for Surge. And then it also adds value to LSTR, because LSTR obviously is valued based on Leo per share. So this is a very reflexive economy. It's a very vertically stacked economy where, one thing benefits the system, and that creates a benefit for the whole system. It doesn't just benefit. Things are not isolated. They're all benefiting each other. So I think it's really interesting to imagine, when tokenized Tesla is sold out, seeing a real world asset that has an external correlation added to this vertical stack. I do think it will increase the profitability, not only because there's a fourth cross-chain market maker, but also because it adds volatility to the other three market makers, which then leads to more profit. So again, this is all a very interesting kind of like real-time experiment that we all have a first row seat to. And I'm very fascinated by how they've thought through all these mechanics, on the LeoStrategy side of things. I think it's going to be really interesting to watch it all play out. So here they talk more about the LeoStrategy yield that's delivered to LSTR holders. I'm a pretty big holder of LSTR. I think I have about 20% of all LSTR now, and I've been slowly and quietly buying both LSTR, Surge, and Tokenized Tesla. I don't think I'm the biggest. I think I'm the second biggest TTSLA holder if you combine the base and Hive Engine holdings. But I will probably be first once this video is live. So I've been buying LSTR, and a big reason why is because there's a couple reasons, but right now it's actually discounted to the net asset value. So if you actually look at the market cap of LSTR, compare it to the value of Leo held by LSTR or by LeoStrategy, and the equity value you'll see here is $344,000, while the Leo holdings value is $429,000. So that means that the LSTR equity shares are essentially trading at a deep discount relative to the holdings of the balance sheet. And you should value, and I've continued to say this, and if you look at MicroStrategy and other strategy companies, aka digital asset treasuries, when you look at them and people try to value them, you're not only looking at the current net asset value, you also need to value the growth, and I like to call it the velocity of accumulation. And I see that LeoStrategy has kind of picked up on that terminology as well. So the velocity of accumulating additional Leo is just as important, maybe more important than the current net asset value. So if you value a strategy company, and I'm not even just talking about LeoStrategy, if you look at MicroStrategy or any strategy company, you need to look at how much do they hold now and how much do you think that they're going to hold in the future. And there's a lot of different ways to measure that. I think the best way to measure it is Leo yield. So MicroStrategy is actually the one that coined this term. They called it BTC yield, and obviously that's still their KPI, is how much yield can they generate in Bitcoin terms, which essentially just means how fast can they grow their balance sheet. And LeoStrategy has taken that that BTC yield idea and applied it to Leo yield. So basically you just take the week over week increase of Leo held on their balance sheet, and that is it's really the lead indicator of how to value LSTR, because then you look at LSTR and you say, okay, well, each LSTR share is obviously, there's an LPS figure per LSTR share. For example, per LSTR share right now, it's 36.946 Leo per share. And that just continues to increase as they add more Leo to the balance sheet. And the pace of that increase is measured by Leo yield, which is obviously 211% APR right now. So basically at this pace, that the LPS is going to grow by 211% 12 months from now if LeoStrategy continues at the pace that they're going at. So if you buy one LSTR share right now, that the LPS will be 211% higher 12 months from now. That's essentially how that works. And when you look at TradFi stocks and when people value companies, they usually use EPS, which is earnings per share, and then also things like price to earnings ratio or PE ratio. What that is essentially doing is very much the same valuation metric. So what you're doing when you buy, for example, Apple, if they're trading like 20 PE, that means that you're at like each dollar of Apple share you're buying is not buying essentially like each share is not backed by revenue. It's backed by future expected revenue, if that makes sense. So people are forward looking when it comes to stocks. You're not, you're buying something not for the value it is necessarily today. You're buying for the value you expect it to be later. So very much the same logic fundamentally can be applied to strategy companies like LeoStrategy. And you look and you buy and you value based not only on, what is held by them now, but also by the accumulation or the velocity that you expect them to hold in the future. So hopefully that makes sense. And I kind of keep mentioning this because I feel like the market just doesn't get it. And I do think that over time, especially when this dashboard is live and, with people like me talking about it, I think more and more people will catch on and understand these concepts. People are wrapping their heads around it when it comes to things like MicroStrategy. And I just think with LeoStrategy, essentially the on-chain version of that, right? So people will over time wrap their heads around this. Here they talk a little bit about the altcoin market, but then they also talk about, why LSTR is down a lot. Down a lot being relative. If you bought in the pre-sale, you're still up 282%. So I don't think anyone who bought LSTR in pre-sale is crying about it. Same goes for Surge. Surge is, if you bought Surge, you're actually up from the pre-sale, the average price of the average buyer in the pre-sale. And then you've been earning yield every single week. And we're going to see in a second that over $10,000 in yield has already been distributed to Surge holders. So anyways, they talk a little bit about LPS, which I got into. They talk about how the market dipping is actually a good thing for LeoStrategy in the long term. So I know that they were posting a bunch of threads, actually, which were really fascinating to look at, where they basically told people to zoom out. And the reason why they're telling you to zoom out is because LeoStrategy is not building something for the next month or week or year even. They're building something for the next 10 plus years. It's a decade plus long project that they're building. And the goal here is not to, deliver immediate, kind of short-term things at the expense of long-term gains. So when you look at it that way, you realize that, especially in the context they're talking about here, when the market dips, that creates volatility. And volatility is vitality for LeoStrategy. And the reason why is because their profit comes from market making. And when is the best time to market make? When there's a lot of volatility. And volatility, the highest volatility comes from dips in the market. So when the market goes down, LeoStrategy actually loves when the market dips because it then becomes more profitable in USD terms. It also then gives them the opportunity to buy Leo even cheaper because if the market is dipping, they're actually making more money and then they're able to buy Leo cheaper than they are if the market's ripping upwards. So it's kind of this fascinating reflexive flywheel in and of itself, which is, if Leo's going down because the rest of the market's going down, LeoStrategy's profiting more, and then their money that they're using to buy Leo is actually more effective because the Leo price is lower, which means that they're adding more Leo to the balance sheet, which means that LSTR's LPS grows heavier. Surge becomes more and more over collateralized because obviously there's more Leo on the balance sheet. And then things like tokenized Tesla also become more over collateralized because there's more Leo on the balance sheet. So again, all of this stuff is very reflexive. It's very much a vertical stack. And as you add value to that stack, it increases the value of the whole stack, not just one of the assets over another. The whole stack grows together. So I think this is a really interesting perspective. And when you look at things and zoom out, you see them much differently because a market dip is an opportunity for them to buy more Leo cheaply while generating more profits. And then when the market eventually turns and goes up, they then made even more long-term economic value, which then again leads to more economic value for LSTR, more economic value for Surge, more economic value for tokenized Tesla. Here they talk about Surge. They addressed some of what people have been talking about, like failure to launch. I do also find this quite hilarious. So the average presale buyer, I believe, bought in around 72 cents. That's what their dashboard says too. The Surge price right now, and like I said, the market just dipped extremely deeply this morning. Bitcoin went down, 6%. Hive is down 10%. Rune is down almost 10%. So the whole market has dipped pretty heavily. Surge is still trading at 70 cents. Before that dip, I think it was closer to 75 cents. So Surge is a bond, right? And you need to look at it like a bond. You need to value it like a bond. You need to look at and when you value a bond, you look at the yield. You don't look at, the price of the bond is somewhat irrelevant. Obviously you want the price of the bond to be good when you want to exit, but you don't buy a bond so that you can exit it tomorrow. If you're planning to exit tomorrow, you should buy like a money market fund. Obviously this is TradFi terminology. The crypto version of that is if you want the money tomorrow, you should buy a stable coin. If you want to invest in something for the long run and earn yield while you wait for upside, that's what Surge is for. So Surge is not for the person who wants to buy today and flip it tomorrow. It's for the person who wants to buy today and then flip it a month or 2 months or 6 months from now for a significant gain and earn yield that entire ride. So that's what Surge is for, and you need to really value it in that way. And I like to look at the effective yield. I think that's the best way to value Surge. So as the price of Surge goes lower, it is also reflexive because the effective yield increases. So if Surge is trading at 70 cents, which it is now, the effective yield is 21.43%. If Surge goes to $1, the effective yield will be 15%. If Surge goes to 50 cents, the effective yield is significantly higher. So as the price of Surge goes down, the effective yield actually increases, which then increases demand to buy it, which then drives Surge back towards its $1 floor price. So these things are very reflexive, and they, in the long run, they will always even out to the peg being magnetized. So essentially, what that means is, while there, and they do talk about this, and I'm just kind of giving my side of things. While there is a $1 floor price, that means that in the long run, you confidently know that every Surge you hold is worth no less than $1. That does not mean that the market will give you $1 per Surge every single day you look at the market, right? So you need to kind of separate. You need to really separate floor value from market value. So floor value is the value of Surge dictated by LeoStrategy, and that is dictated by the liquidation preference and the conversion value. So the liquidation preference means that in the unlikely event of, LeoStrategy dissolving as a fund, every Surge holder, and by the way, Surge is at the top of the preference stack, every Surge holder will get paid $1 per Surge that they hold. And then it also means that the conversion value is $1 per Surge minimum. So if in the future you want to convert to LSTR, obviously once LSTR crosses $50, you can convert 50 Surge to 1 LSTR, which means that you're getting $1 per Surge that you hold. Because if 1 LSTR is $50, you have 50 Surge, you convert 50 Surge for $50 worth of LSTR. If LSTR goes to $100, well, now each Surge is worth $2. So when you look at the correlation, or you look at the upside, Surge actually has unlimited potential upside as LSTR rises, and it has a completely capped downside at $1 because of the floor price. So try to wrap your head around that. Try to think of Surge as a bond and value it based on the effective yield, and stop looking at it as like, it should be trading at $1 in the market. Yeah, it should be trading at $1 in the market. And honestly, when I see it trading for way less than $1 in the market, it just makes me realize the market doesn't understand and is mispricing Surge. Obviously, I'm a pretty, market. I'm a little bit of a market is always right maximalist. So if the market is saying that Surge is worth 70 cents, well, the market's saying Surge is worth 70 cents, right? So that just means that if you believe in the peg, you believe in the floor price, you believe in LeoStrategy, well, buy Surge at 70 cents, and you know that you're going to make 30 cents per Surge you buy in the future, and you're going to earn yield while you wait for that 30-cent gain. So that's why I'm buying Surge. I've bought quite a lot of Surge in these past couple weeks as I see the floor price kind of getting tested. I think at one point Surge went up to like 92 cents and was starting to flirt with that floor price, and then the market turned, and now we're seeing it at 70 cents. This is very normal. It's all meant to be open market. It is open market, maxi behavior, in my opinion, which is actually a good thing. So let the people who want to exit their Surge, for a modest gain from the presale, exit Surge and then buy other things, because they probably want to buy fully risk-on assets, and that might be things like Leo, it might be things like LSTR, it might even be things like ETH or Rune or something else. Because when the market starts to go down, people are going to look for money, right? So think about it from a personal perspective. When the market goes down, you kind of look for you look in the couch cushions for some change to buy stuff, right? So if you have something in your portfolio that is dropping a lot less than the rest of the market, if you've got a lot of conviction in other things, you may sell that and buy other things. So again, just my rant about the open market. I think a lot of people just tend to not understand that. And here they talk about when you trade Surge, trade it like a bond on the yield curve, and it will start to make sense. So I'll just read these because I think they're valuable. You're buying a bond-like instrument that has a stated floor value of $1, which means uncapped upside and capped downside. You're buying a bond-like instrument that pays you yield every single week, as HBD, USDC, or LSTR. They also mentioned that they are working on the option to get Surge as your payout. I'm actually excited for that. I will probably choose, what I may choose to do is get some of my Surge paying me LSTR and some paying me actually more Surge. And I'll probably play with the yield. Again, I've been looking at this as a yield trade. So when the yield is high, for example, whenever it's over 20%, I am a heavy buyer of Surge. When it's at 18%, I still buy, but not as heavily. So I'm essentially looking at it as like a curve. And when the yield is where I'd like it to be, I buy it. Start looking at it like a bond with a yield curve. And I may also do the same thing with my auto compounding. So when Surge is cheap, I'll probably have my auto compound set to Surge. when Surge is expensive or trading closer to the $1 peg, I'll probably change it to LSTR, for example. TLDR, Surge is violently, or sorry, I missed this third point. You're also buying a convertible bond-like instrument that also has a feature of being able to convert to LSTR at a 50 to 1 ratio. When LSTR is trading over $50, Surge will start to climb rapidly in price. $1, $2, $5, $10. Surge has uncapped upside as LSTR succeeds. So the tagline is, buy Surge if you want uncapped upside, limited downside, and yield while you wait. So just keep that tagline in mind, and you will do just fine. I feel like I'm full of rhymes right now. So now they're going to talk about the TTSLA presale. So Tokenized Tesla is in presale. It's starting to sell out pretty quickly. I think it's approaching 25% sold out. So very quietly kind of approaching that 50% level where things usually flip for these presales. So things tend to be kind of slow going until they hit 50% sold out, and then they just, like a snap, they just start to sell out very quickly because people realize that the presale opportunity is leaving. So I kind of expect the same thing to happen with Tokenized Tesla. I think once it hits 50%, it'll start to climb rapidly, 50, 60, 70, 80, and then 100%. Usually gets hit after, once it hits 75%, I think 100% is usually sold out in like a day or two. So TTSLA is live in presale on both LeoDex and Hive Engine. They showed a screenshot of both. You can see for a limited time, you can buy Tokenized Tesla at a 20% discount to the 1/100 peg. When TTSLA is sold out, 2 liquidity pools will be launched, and they mentioned earlier with $20,000 in liquidity. They'll be launched at the pegged ratio. So if you're quick, you can buy the presale and then try to flip it for a 20% gain. Obviously, then if a lot of people do that, you'll see Tokenized Tesla trade in that range as it fights back for its peg. The beautiful thing about this design, and they actually don't even mention this in this post, the beautiful thing about this design is they added essentially a feature of the presale where if you buy in the presale, you get a 2x yield boost for 60 days. The beautifully reflexive part of that is if you believe that the presale is going to sell out, the pools are going to get launched, Tokenized Tesla will be priced at the 1/100 peg, and you believe that some presale buyers will then flip their Tokenized Tesla for an instant gain, and then Tokenized Tesla will trade somewhere in that 20% range. Like it's obviously not going to trade cheaper than the presale. It definitely can, but even Surge is showing that people are willing to sell when they can make a modest gain, but they're not willing to sell when it's, a loss from the presale. So basically, that it's going to bounce in that 20% range. If you look at the chart from the Tokenized Tesla docs, you'll know that the yield increases if the price of Tokenized Tesla is uncorrelated to the peg. So if it trades cheaper than the peg. Let's just use really simple math. If Tokenized Tesla is trading 20% discounted to the peg after the presale is over, then the yield will actually be 20%. And that is governed by, transparent on-chain governance that is released by LeoStrategy. So go read the docs if you want to see how that works. But if it's 20% discounted, it means that the yield is actually 20%. Since everyone who bought the presale gets a 60-day boost on yield, it actually means that your yield is 40%. So this is obviously using a lot of hypotheticals, but if Tokenized Tesla is trading much lower than the peg after the presale, the effective yield is actually going to be 40% for presale buyers. So you kind of, and I think that they designed this partly based on how the Surge presale played out, which is if you buy in the presale, they want you to succeed, right? That is LeoStrategy's primary goal, is that presale buyers succeed above and beyond everybody else. That is the number one goal, right? What they've designed here is, okay, well, we saw what happened with Surge. If you bought in the presale, you're still up, you're profitable no matter what. But I do think that it's expected that you get closer to the floor value, even though that may take time to achieve. Like I think Surge is going to reach the floor value. It might take a week, it might take a month. I don't know. It's going to reach it at some point. And you can look at my wallet if you want to see. I've been buying Surge, so my money is where my mouth is. What they've designed here with this 60-day yield boost is to say that we understand that like some people want to flip it and make an instant profit. But let's say you buy the presale, you don't necessarily want to flip it, but you also don't want to get hit with a heavy discount, right after the presale ends because some other people are flipping it. What they've built in is this yield boost to say, even if people go out and flip it, from the presale, you're going to get a 40% effective yield or at least a 2x whatever the current real yield is. And that is going to get paid to you every single day because you bought in the presale. So you win if you buy in the presale, whether you flip it or whether you hold it. And I think that's a really critical part of this design, which is you win no matter what. If you bought in the presale, you are a winner. And that is what LeoStrategy is going for. And I think that it's a really important aspect of this presale as compared to something like Surge. So Surge obviously is doing very well in my opinion, but I do think this yield boost will create more positive sentiment, right? And sentiment is important. You don't want to like blow yourself up trying to work on sentiment, but I do think a small kind of change like this is really important for sentiment. So I think that's a really interesting aspect of this presale. Probably not understood super well, but it, you know, if you use the TTSLA manager, it kind of explains it a little bit to you. You can use the FAQ, the FAQ buttons to kind of learn more about that. But yeah, I think I think that 2x yield boost is very underappreciated. And if you really dive in and try to think about that a little bit, you know, basically if you believe that people will flip it, well, then you can just sit and earn a higher effective yield, or you can be one of the people that flips it, right? So if you're a pre-sale buyer, you win no matter what. That's kind of what LeoStrategy is going for here, and I do think that they're going to achieve it with this pre-sale. So I am buying tokenized Tesla in the pre-sale. I've been buying on Base. I've been buying on Hive Engine. Like I said, I think I'm the second highest holder, and hopefully today I'll be the first. So the last thing here is that Thorchain mentioned LeoDex and LeoStrategy's tokenized Tesla product. So this is pretty cool. I saw this morning as well. So Thorchain, every Monday, they release a weekly, kind of ecosystem update. And the first featured spotlight is actually LeoDex. And not only are they featuring LeoDex, they're actually featuring tokenized Tesla on LeoDex. So they said, number one, LeoDex, a big step for RWAs on chain. LeoDex introduced tokenized Tesla, marking their first tokenized RWA. Is this the start of a long series of RWA listings? So obviously LeoStrategy built tokenized Tesla, and then LeoDex is able to list it thanks to Rango and Relay, because those protocols support Base and Uniswap, where tokenized Tesla is listed. LeoDex is actually able to have tokenized Tesla on the platform, and it's kind of like a nice synergistic partnership between LeoDex and LeoStrategy, where LeoStrategy builds the tokenization, they build the tokenized products, LeoDex is able to list them and give them a platform to reach the broader audience. I think you could say without LeoStrategy, tokenized Tesla wouldn't exist. Without LeoDex, the exposure of people like Thorchain talking about tokenized Tesla wouldn't exist, right? So they both kind of give each other economic value and benefit. And then obviously the kind of core beneficiary is the Leo token, because LeoDex is obviously built on the Leo token. LeoStrategy is also built on the Leo token. So the Leo token economy is the ultimate beneficiary here. That's all I got. If you want to support the vision that LeoStrategy is building, I know I do, and I keep kind of evangelizing and talking about all these ideas as much as I can, because I'm trying to spread the good word. You can support them by obviously talking about them like I am. So if you maybe don't have the capital to buy products by LeoStrategy, at least like talk about them, make some posts, make a video like I am, or maybe in addition to, you can buy the LeoStrategy products like tokenized Tesla, and that supports their growth, supports the vision of what they're building. Like I said, I can only say it so many times, but I am buying tokenized Tesla. I want to see it sell out of the pre-sale. I want to see that fourth market maker go live. I want to see more profits generated by all the market makers, and I want to see more Leo get bought off the market and permanently staked by LeoStrategy. Thanks for watching this, and I will see you tomorrow at noon Eastern for the AMA. Peace.